Hey there, everyone. Happy Monday. This is the week for Nvidia's earnings on Wednesday in the after hours, and I am very, very close to having my Nvidia earnings and stock price prediction ready to go for you, and I will give a little bit of commentary in this video, but watch for my next video as that's going to contain the full commentary, the full breakdown, the full Nvidia stock price prediction and earnings projection that I have, including the analyst estimates that are out there right now. We'll talk about those comparisons and some of the considerations that we have as we come up on those earnings. So I'm going to cover the indices in this for S&P 500, NASDAQ 100, Russell 2000, Nvidia, of course, and then also what's going on with Bitcoin. And I'll give an update on what we saw on Friday from the quantum stocks as well. So let me put this up here for you. We'll kick things off with SPY, looking at the daily chart. And when we look at this, you can see that we just had a kind of a roasting day, if you will, on Friday when that came around, that the market couldn't hold the 609.83, and it dumped all the way down to the 50-day EMA and SMA. That's the red and the pink lines that you see right down here at the bottom of the candle. And so keeping that, it is a good area for a bounce. We're seeing that bounce so far, but now we have some trend lines to get back on top of. We lost the 20-day. We lost the 5 and the 13. We want to watch and see that we're not dangling off the moving averages that are in there. Let me get rid of some of those technicals so that way you can see a little bit of what's going on. These are all faster moving averages up here. The green one is the 5, yellow 13, blue is 20-day. The top two are EMAs, that's an SMA. And losing those faster moving averages, watching them sell down below the slower moving averages, is something that we want to be careful of for what exactly could come along from there. The RSI down below 50 on that sort of sell-off. And another caution that we have is the divergence that we have on the weekly chart between the prices going up for the S&P and the momentum going down. So losing the 609.83 when we had a full candle on top of it, not great. It could show us signs of a double top. It could show us signs of a slowing down in the market. We had to watch for that. And then also when we look at the RSI on the bottom of this, we really want to watch to see, especially if we start to cross down below 50 on the RSI on the weekly chart, that could give us a sign that things could slow down further from there. So we do have reasons to be bullish from where we're at right now, but we also have some reasons to be cautious as we watch and see what happens at the end of this month, leaning into the labor market report at the beginning of March as we start to see some of those Doge cuts really start to hit the February numbers. So we'll see because there was been a lot of government employment over the past couple of years about government jobs added on. And well, if they're starting to cut those off instead, starting to trim some of the fat, we could see a massive slowdown there, and it could impact some of the numbers that we see. So I think that could be some of the reason why we see some of the caution that we do in the markets and why we saw a little bit of the emphasis lean over towards long-term treasuries. So let's move over from there to the Qs. We didn't quite make it down to the 50 days on this one. We got darn close to it, down below the 5, 13, and 20, and bouncing right now to about where that 20 is at in the pre-market hours, staying up above the 50. Still a good thing for right now, still overall in bullish territory. When we move to the Russell 2000, we actually punched down below the 200-day a little bit, and now we're bouncing, losing that 200-day. We'll probably see a big old sell there. Now, mind you, there's a lot of considerations that go into this. I talked about the 4 pillars for the markets, especially where the Russell 2000 is concerned. So high GDP, stable employment, low inflation, and easy monetary policy. Those are the 4 things that we're looking for. And I think those are the 4 main drivers that we see in the markets right now. Nvidia earnings themselves, I think, are going to make the market a little bit nervous up until Wednesday in the after hours when we get those answers. And with that said, let's move over to Nvidia. So for Nvidia, sold down with the rest of the market, getting rejected off this trend line. We almost got up there during the regular trading days on Friday. And I said, we're in this area of chop up here near these peaks that we have for Nvidia. Not a bad place to be. Finding support down on the 50-day, bouncing so far. And I got to say, the biggest thing for Nvidia that we want to watch out for are those demand questions that we have. And really, is there enough demand there? Is there enough money coming into Nvidia to justify the growth metrics that we would need in order to make Nvidia stock cheap from here on a forward-looking basis? So we're looking for the guidance that we get from Nvidia. We're looking for the results that we get from Nvidia. Anything that comes in soft is not going to be great for Nvidia stock price. We need guidance to come in strong, and we need to hear about what's coming up ahead for us. And then don't forget that in March, we also have CES for Nvidia. So hopefully there's some foreshadowing during those earnings. I'll give it more of a breakdown on that when we get to the full Nvidia stock price prediction and earnings projection. I will make a dedicated video to that. It will be my next video to come out, so make sure they hit the subscribe button to see when that lands. So that is the very next video. I'll have it out by tomorrow morning. I'm hoping to do it tonight. So let me put this back up here. So for Nvidia, got to hold that 50-day in the near term. We'll probably stay in this area chop unless the market itself continues to slide from where it's at or rallies significantly from where it's at. I think that we're going to be in this area of chop here between now and market close on Wednesday, and then we'll see what the earnings themselves bring for us for the open on Thursday, and then I'll give an update for Nvidia and how those numbers play out and what that looks like on a forward basis as well. So moving over to Bitcoin. Bitcoin's getting pinched between the 20-day and the 95,413. You can see that we keep on finding support there, and watching for that support to be broken could be huge for us. The biggest support that we have here is this thick bold line that we have off the 2021 peaks that we found massive buying pressure before. So we want to watch and see, will we get pushed down below 95,413, or will we continue to find support there? I mean, so far it's held pretty strong, but the bears are also bringing their A game and keeping us down below those 20s. When we popped up a bullet above it on Thursday the 20th. Friday came along and smacked us right back down. Haven't been able to break the 20-day moving average since that point in time. And so for Bitcoin, right now that question is, are we going to continue to trade sideways? Are we going to get that breakout moment soon where we're going to get out of this trading range that we've been in? Are we going to see that double top play out? Or are we going to find support here and allow that rally to come on? Honestly, I think between now and the first week of March is where we're going to get our answer when those numbers come out for what we see for employment. I think that's going to be huge for us. So anything that spells out signs of recession, contraction in GDP, weakness in jobs, whatever you want to call it, those are things that are going to be not so great for the risk on assets like we would have when it comes to the crypto market. For XRP, just a quick look there for what's going on. Down below the 50, above the 20, we're finding support, although today falling down below that support on the 20-day. Let me take off some of these technicals on here. So even though we're in this buying area down here, the support area that we have, it is important that you can see those two indecisive candles that we have there in the middle. That's huge for us, watching to see what exactly can happen next. And this sort of big candle down, especially if we get high volume today on a sell, we want to watch and see, because that could lead to a continuation. We just need to watch and see what shapes up for us. Now, for the quantum stocks, I talked about those in my video on Friday, and you can see the consolidation pattern on Rigetti. You can see that we have a consolidation pattern on IonQ. Selling down below that, that could mean that we could see a further sell coming for that, especially if the market continues to sell. We're going to have to watch and see. For right now, I think a lot of the hype is out of it, and you know, like I said, the technicals then take over for signaling what exactly can happen next. We're looking at the 4-hour chart right now, breaking down below that consolidation on IonQ. Maybe we get a little bit of a sell. Maybe we bounce a little bit after that roasting that we got on Friday. And we go to QSI. We're still pretty much trading sideways as we look at the 4-hour chart. And if we move over to a daily chart, you can see that we have a slight downtrend taking place here. And the MACD that's on here, which I don't use very often, one of my members from the Patreon asked about it. Hey, could you talk about the MACD for, I think it was Nvidia stock. What do you think about it? So I talked about that. I'm going to take it off to save us some space on the chart for right now. And, we see maybe a little bit of selling outside of that. And if we bring up the Bollinger Bands for that sort of narrowing, we're looking for that breakout moment for QSI, and that could be coming soon. QBTS was a lot in the same, where you can see that trend line that we have. We had a significant narrowing, but then we saw a bit of a breakout and then got rejected off the 618 level for QBTS. So D-Wave Quantum, as it were. So let me put myself back up here and we'll summarize this thing. I think this week and next are going to be the two big weeks that we have. We have PCE numbers at the end of this week, and then next week we get those labor market numbers coming out, and inflation and jobs are just going to be two huge catalysts that we have for watching the market. I think a lot of emphasis goes on to the labor market reports that we have, non-farm payrolls, unemployment rate. We want to watch and see if they continue to stabilize. That's going to be excellent for the markets. Or if they strengthen, that's going to be excellent for the markets. If inflation starts to push up, employment starts to go down, well, that could be negative for the markets as well. We need to continue to see. We're still trying to answer that question of what sort of a risk environment we find ourselves in, and I still think that it's mixed right now, that we haven't fully answered that question. So we get some choppiness with the stock market itself, and we get some choppiness with the bond market that we see, and then also with the crypto market. And until that question of which risk environment do we find ourselves in gets answered, we just won't know. We want to keep an eye on what the government has to say. for the Doge dividend, the Doge stimulus checks that could be coming our way, as that could be a catalyst for the markets too. It could push us more into a risk-on type environment there, especially if it's on the heels of some easier monetary policy, but it could also add inflationary pressures. So it's a bit nuanced from where we're at right now, and we're going to have to continue to watch it unfold. And guys, if you want to talk to me and my community members, see my buys and sells and my technicals, you can find it over at the Discord, available through the Patreon. That link is down in the description. And if you want to learn to do technical analysis like I do, and also get access to the bread recipe trading strategy developed by Stockmo. Stockmo is a personal friend of mine, and there's a link for his course down in the description. You can find that, sign up, use the code word DOCTOR, D-O-C-T-O-R, when you do sign up. That will give you a massive discount on that course, and that bread recipe trading strategy is sure to really help find ways to ease your returns in the stock market. So just check it out. Easy to set up. There's even a learning community that goes along with it that can answer your nuanced questions that you might have as well. Thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. See you next video.